Hey traders, welcome back to your daily rundown. It's Thursday, May 1st, 2025, and the markets are moving fast post-FOMC and ahead of Friday's job numbers. We're going to unpack today's biggest Forex news, get into some detailed technical analysis on the majors, Euro to US dollar, Pound sterling to US dollar, and US dollar to Japanese yen, and I'll share my forecast for Friday's session with a few tips to help you stay sharp. Forex News Highlights, May 1st, 2025. 1. Fed holds steady, signals June is live. The Federal Reserve held the federal funds rate unchanged at 5.5% yesterday, as expected, but what caught the market's attention was Chair Powell's tone. He didn't rule out further hikes if inflation picks up again. That hawkish hold gave the dollar a lift late Wednesday, but gains were limited today as traders brace for tomorrow's U.S. jobs data. 2. Eurozone inflation surprises to the downside. April's flash CPI out of the Eurozone came in softer than expected, headline at 2.2% year-over-year versus 2.4% forecast. Core inflation also edged lower. This added fuel to speculation that the ECB could cut rates as early as June, putting additional pressure on the euro. 3. BOE rate hike odds fade after UK PMI Mississippi. In the UK, manufacturing PMI for April printed at 48.7, well below the expected 50.2, signaling contraction. The data added to growing evidence the UK economy is softening, prompting markets to price in a more dovish path for the Bank of England. 4. Yen firms on risk-off moves, but BOJ in focus. The Japanese yen found some footing today as US equities pulled back and Treasury yields slipped. But make no mistake, this rally is fragile. Traders are still watching for any further intervention clues from the Bank of Japan after Monday's suspected stealth move. Technical analysis, major currency pairs. Small blue diamond euro to US dollar, hovering near key support. Current price, 1.0668. Support levels, 1.0650, 1.0610. Resistance levels, 1.0725, 1.0780. The euro remains under pressure following the weak inflation print. We saw the pair dip toward the 1.0650 handle, which is acting as short-term support. A break below could open the door to 1.0610, last seen in mid-April. On the upside, 1.0725 is your first real resistance, with the 200-day moving average at 1.0780 likely to cap any knee-jerk rallies. Outlook, bearish bias stays intact unless we get a surprise NFP miss that weakens the dollar. Small blue diamond pound sterling to US dollar, soft data, softer pound. Current price, 1.2442. Support levels, 1.2400, 1.2335. Resistance levels, 1.2515, 1.2580. The pound couldn't hold its ground after that disappointing PMI print. Pound sterling to US dollar is now flirting with the 1.2400 level. If that breaks, 1.2335 from mid-March could be in play. Bulls need a close back above 1.2515 to get any momentum going again, but the near-term picture looks heavy. Outlook, cautiously bearish. Watch US job data Friday. If strong, cable may break 1.2400 cleanly. Small blue diamond US dollar to Japanese yen, intervention risk looms. Current price, 153.90. Support levels, 152.80, 151.40. Resistance levels, 154.70, 155.50. After Monday's suspected intervention pushed US dollar to Japanese yen sharply lower from above 160, the pair has bounced but remains below 155. The 153.00 to 154.00 zone is now a battleground. If Tokyo steps in again, 151.40 could be tested fast. On the flip side, If risk appetite returns and US yields climb again, this pair could sprint back toward 155.50. Outlook, neutral with high headline risk. Be careful trading this pair around the Tokyo Open. Forecast and trading outlook for Friday, May 2, 2025. Tomorrow's big ticket item is the US Nonfarm Payrolls report at 8:30 a.m. Eastern Time. Forecast, plus 180K. Unemployment, 3.9%. Average hourly earnings, plus 0.3% M/M. If we get a strong jobs report, something north of 200K with solid wage growth, the dollar could get a fresh boost, especially against the euro and pound. A miss, on the other hand, could cement expectations for a Fed rate cut later in the summer. Keep an eye on ISM Services PMI at 10 a.m. Eastern Time as well. A weak print there could extend dollar softness heading into the weekend. Trader Tips, May 2, 2025 edition. 1. Manage risk ahead of NFP. Non-farm payrolls often deliver knee-jerk volatility. It's not the day to over-leverage. If you're trading live into the release, keep stops tight or consider scaling in after the initial move. 2. Don't chase JPY moves blindly. With the BOJ potentially intervening again, be careful shorting the yen at elevated levels. Use tight trailing stops and reduce size in US dollar to Japanese yen positions heading into the Tokyo session. 3. Watch for weekend flows. It's the first Friday of the month, expect some position squaring. That can distort price action, especially late in the day. If you're sitting on profits, don't be afraid to take them off the table before the weekend. 4. Stay focused, not reactive. There's a difference between reacting and preparing. Have your levels marked, know your plan, and don't let FOMO dictate your trades, especially in the heat of a major data release. That's your full Forex rundown for May 1, 2025. It's shaping up to be an exciting close to the week with US jobs data in the spotlight. Stay nimble, trade smart, and keep your risk in check. I'll be back tomorrow to break down how the markets react and what's next as we head into a new month. Until then, trade well.